Okay, so as I talked about last day, please can you all mute your microphone so that the recording will be very clear for everybody in here.
Yeah, to say, I'm fully possible.
Okay, thank you. Okay, so let's begin. We I decided we should talk about technical indicators, and um since most of you and a lot of people are struggling with technical indicators and how to use them and when not to use them. So I decided for us to embark on this journey because technical indicators play vital role in trading. You cannot trade without technical indicators to get it. Most people will say technical indicators don't work. It does work. The fact is you don't know how to use it in favor of you. So today's lesson is all about technical indicators, and we'll talk about the types of technical indicators as you can see on the screen. So let me read what's on the screen, and then later on I explain everything to you. So we have types of technical indicators. So technical indicators. A technical indicator is a mathematical calculation that can be applied to a stock's past patterns like price volume or even to another technical indicator. I'm reading from the right. Technical indicators do not analyze any part of the fundamental. So when we talk about technical indicators, they are all about technical, not fundamental. So technical indicators do not analyze any part of the fundamentals business like earnings, revenue, profits, ECT, like fundamentals like news, um, NFP, and all that. So with technical indicators, what it does is um, it's calculates the past patterns like price, volume, or even the another even to another technical indicators. They analyze or calculate price actions and price volume. So let's go to the next slide. I think the next slide is not opening. I don't know why. Okay. So what does technical indicators do? Um, the results is a value that is used. So after the technical indicator um, calculates or measure the past patterns of price and then patterns and volumes, it gives alerts to the trader about a trend. So it gives alert one, please and please again. And from now onwards, when you have a meeting or a class, please get a note for trading because this something serious. You don't have to joke with it. You need a notebook, a pen, and a quiet environment to learn. This is not a place to play or something like that. This is for business. So let's continue. So the results the results oh sorry, I think something went wrong here. Sorry. I know. Okay. All right. Okay, so the results is a value that is used to calculate or to give alerts to traders. So technical indicators, one, the users, what it does, it gives alert to traders. Two, it predicts the direction of future prices. So two, technical indicators predict the direction of future prices. And three, confirm technical analysis suggested by other indicators. So sometimes you have two or three indicators on your chart. So one will confirm the other, or the other will confirm the other. That's how it is. So let me read from the right. TI, that means technical indicators, are most extensively used by active traders in the market, as they are primarily designed for analyzing short-term price movement. To a long-term investor, most technical indicators are of little value, because you don't need all indicators to be a trader. You need just maybe two or three. Yes, you need to combine two or three indicators to have a successful trading journey. But before that, you need to study um, and analyze the cons and the pros of that particular indicator, because you can't just pick an indicator and then use it. And no, you have to know how it works, when to use it, when not to use it. So let's go to the next slide. um, so we have categories of indicators and you have types of indicators. So these are the categories of indicators. So with the categories of indicators, the categories of indicators give the first category is leading indicators, and the second category is lagging indicators. So with the leading indicators on your left, that is red. So leading indicators, when we see something is leading, it means it's ahead. And when you say something is lagging, it means it's slow. So with leading indicators, it gives trade signals when the trend is about to start. So I'm reading from the left. So leading indicators, it gives signals when the trend is about to start. So when the trend is about to start, a leading indicator gives a signal. A leading indicator gives signal anytime a trend is about to start. Hmm. Um, Timothy, your hand is up. Please, what is it? Let's continue. Let's continue. So, with leading indicators, with the categories of indicators, you have leading indicators and you have lagging indicators. So, with leading indicators, they give signals when the trend is about to start. So, when a trend is about to start, a leading indicator gives signals. So, I'm reading from the left. They try to predict price by using a shorter period in their calculation, thereby leading the price movement. The most popular leading indicator are stochastic, MACD, and RSI. Um, Guys, please give me a second. I'll be right back. Give me a second. Sorry for this. Let me pause this.
It's me alone and it's only two. The rest they are not in.
No problem. No problem. No problem. Let's continue. Recording is in progress, so let's continue. So we were at the lagging indicators. So lagging indicators, they try to predict. I'm reading from the left. They try to predict price by using a shorter period in their calculation, thereby leading the price movement. The most popular leading indicators are stochastic. I'm reading from the leading indicators. So the most popular leading indicators are the stochastic, MACD, and then the RSI. So they are the most popular. And then let's go to the lagging indicators. So with the lagging indicators, uh, they those that follow the price action. So lagging indicators follow price action, and then leading indicators gives trade signal. So when trend is about to start, so know the difference. So lagging indicators are those that follow price actions. Okay, so the lagging indicators, they give a signal after the trend of a vessel has started. So with lagging, they give signals after a trend has started. Use them to determine a trend. The most common lagging indicator is the moving average. So when you see with what we have studied today so far, some of you may think, oh, okay, so when you have leading indicators, then I'll go for leading indicators and then leave lagging indicators. No, no. The question is no, like the answer is big no. You cannot leave, go without leading, and like the fact that it's called leading doesn't mean it is going to give you 100% no, or the fact that it's called lagging doesn't mean it's going to fake out or drag you down. No, it's called lagging because it gives signals after you get it after the trend or reversal has started, and then the leading indicators, it gives signals when a trend is about to start. And one silly thing about leading indicators, it gives four signals most of the times. It gives four signals. So you have to combine both leading and lagging indicators to your to your um to your probability, so that at the end of the day you'll be making more than your loss. So and it works perfectly and beautiful as time goes on. This class is all about the theory part of indicators. We'll go into details on the practical side of indicators. That's from tomorrow going. So don't miss this. So next slide. So types of technical indicators. Previously, we were talking about the categories of technical indicators, and we said we have lagging and then the leading. With the leading, they give signals before a trend is about to start, and then the lagging, they give signals after a trend has started already. So types of indicators. So indicators from leading and lagging categories. Yeah, categories belongs to one of the following. So with all the indicators, the types, whether it's leading or lagging, you will see it on the right side of the screen. I hope you all can see it. So we have trend indicators, the types. One, we have trend indicators. Trend indicators. Please, critical. Hello, please, can we go on? I hope everything is clear. Can we go on?
Yeah, boss.
Okay. So we have leading indicators, trend um trend indicators. We have leading indicators and then lagging indicators. Those are sorry. Those are the categories of indicators. But we are on the types of indicators. One, please write them down. Write them down. We have trend indicators. So trend indicators measure the direction. I'm reading from the screen. Trend indicators measure the direction and strength of a trend using some form of price averaging to establish a baseline. As price moves above the average, it can be thought of as a bullish trend. When prices fall below the average, it signals a bearish trend. So with trend indicators, it measures the direction and strength of a trend using some form of price averaging to establish a baseline. As price moves above the average, it can be thought of as a bullish trend when prices fall below the when prices fall below the average, it signals a bearish trend. So on the table, we have moving averages. That's one place, right? We have moving average as types of trend indicators. One, moving average. So with moving averages are used to identify current trends and trend reversals, as well as to set up support and resistance level. So with moving averages, they are used to identify current trends and trend reversals, as well as to set up support and resistance. So when you talk about moving average, we have SMA, SMMA, we have EMA, we have all the moving averages. Do you get it? We have exponential moving average, smoothed moving average, EMMA movie. We have a lot of moving averages, but in general, they are moving averages. And what it does is they are used to identify current trend and trend reversals, as well as to set up support and resistance level. And with the categories, on the categories, moving averages are lagging indicators. So put it somewhere. Moving averages are lagging indicators. Those who are not writing, or jotting down things, please don't expect to get this again, because I'm not going to repeat it. Okay, thank you. Moving averages, we go to the next table. Moving average, convergence, divergence. That's MACD. So if you don't know the meaning of MACD, that's it. Moving average, convergence, divergence, MACD or MACD. So MACD is used to reveal change in the strength, direction, momentum, and duration of a trend in a stock price. So what a MACD does is it is used to reveal changes in the strength, direction, momentum, and duration of a trend in a stock or in the market. So in the categories, MACD or moving average, convergence, divergence is a lagging indicator. So the last table on the list, we have parabolic stop and reverse parabolic SAR, RSI. So we have parabolic stop and reverse parabolic SAR. So parabolic SARs used to find potential reversals in the market price direction. So with parabolic SARs, it is used to find potential reversals in the market price direction when the market price is about to reverse. Parabolic SARs, they are leading indicators. They are fast and sometimes give false signals as well. So they, on the category side, they are leading indicators. So let's move to the next slide. So number 2 on the list of on the types of indicators. Number 2 on the types of indicators, we have momentum indicators. Momentum indicators. So momentum indicators help identify the speed of price movement by comparing prices over time. So it can also be used to analyze volume. It is calculated by comparing the current closing price to previous closing prices. Typically, this appears as a line below a price chart that oscillates as momentum changes. When there is a divergence between price and momentum indicator, it can signal a change in future prices. Let me take it again. Momentum indicators help identify the speed of price movements by comparing prices over time. It can also be used to analyze volume. It is calculated by comparing the current closing price to previous closing prices. Typically, this appears as a line below a price chart that oscillates as momentum changes. When there is a divergence between price and momentum indicators, it can signal a change in future prices. So that's what momentum indicators do. So the first on the table is stochastic oscillator. Stochastic oscillator. So with a stochastic oscillator, it is used to predict price turning point by comparing the closing price to the price range. So stochastic indicators, oscillators are used to predict price turning points by comparing closing price to its price range. And on the category side, they are leading indicators. Second on the table, we have commodity channel index, CCI, commodity channel index. And a commodity channel index is a momentum indicator. So CCI is used as an oscillator to help identify price reversals, price extreme and hello, someone is distracting. Is Okay, let's continue. So the CCI, Commodity Channel Index, is an oscillator to help identify price reversals, price extremes, and trend strength. So these are also leading indicators. CCI, it is a leading indicator. And you have relative strength index, RSI, relative strength index. I know most of you know about relative strength index and stochastics. So they are all leading indicators. If you want to know the category of that particular indicator, they are leading indicators. So with RSI, it measures the stock's recent trading strength, volatility of a change in the trend, and the magnitude of the move. So with RSI, it measures the stocks or the currency or the commodity or whatever recent trading strength, volatility of a change in the trend, and the magnitude of the move. And this is also a leading indicator. So let's go to the next slide. We have three on the third type of indicators. We have volatility indicators. So volatility indicators measure the rates of price movement regardless of direction. This is generally based on a change in the highest and the lowest historical prices. They provide useful information about the range of buying and selling that takes place in a given market and help traders to determine point where the market may change a direction. I hope I'm not moving that fast. So let me take it again. So volatility indicators measure the rate of price movement regardless of direction. This is generally based on a change in the highest and lowest historical prices. They provide useful information about the range of buying and selling that takes place in a given market and help traders determine points where the market may change a direction. So with volatility indicators, it, uh, it's measured the rate of movement. When you talk about volatility, the rate at which a pair or a commodity or a stock or um or a market instrument moves. So with volatility indicators, we have Bollinger Bands. Some people call it Bollinger Bands. Anyhow you call it, I call it Bollinger Bands. So reading from the table, from the first, we have Bollinger Bands. They are used to measure the highness or lowness of the price relative to previous trades. And Bollinger Bands are categorized as lagging indicator. So they are used to measure the highness or lowness of the price relative to previous trades. So second on the table, we have average true range. Average true range. So average true range, the indicator does not provide an indication of price trend, simply the degree of price volatility. So average true range, what it does is it simply gives the degree of price volatility. And it's a lagging indicator. Please take note. Third on the table, we have standard deviation. So standard deviation is used to measure expected risk and determine the significance of the certain price movement. Let me take it again. Standard deviation is used to measure expected risk and determine the significance of certain price movement. And standard deviation is a lagging indicator. I know I know what we are doing is a little bit confusing to most of you, but we'll go to the practical side of it, and everybody, I know everybody will get the understanding. That's why I want everybody to write something down so that when we get to the practical side, when I talk about this, you know what we are coming to do. So let's go to the next slide. We have volume indicators. So with the volume indicators, They measure the strength of a trend or confirm a trading direction based on some form of averaging or smoothing of raw volume. The strongest trends often occur while volume increases. In fact, it is the increase in trading volume that can lead to the large movement in price. So let me take it again. Volume indicators, they measure the strength, they measure the strength of a trend or confirm a trading direction based on some form of averaging or smoothing of raw volume. The strongest trends often occur while volume increases. In fact, it is the increase in trading volume that can lead to large movements in price. So first on the table, we have Chaikin oscillator. I don't know how to pronounce it well, but that's how I pronounce it. Chaikin indicator. Anyhow you pronounce it, it's a word. So it's a noun. So you can pronounce it in any way you want, so far as you are using it right. So you have the Chaikin oscillator that monitors the flow of money in and out of the market. Comparing money flow to price action helps to identify tops and bottoms in short and intermediate cycles. So with the Chaikin oscillator, it monitors the flow of money in and out of the market. Comparing money flow to price action helps to identify tops and bottoms in short and intermediate cycles. And with this Chaikin indicate oscillator, it's categorized as a leading indicator. So second on the table, we have on balance volume, OBV, on balance volume. So on balance volume attempts to measure the level of accumulation or distribution by comparing volume to price movement. So with unbalanced volume, it attempts to measure the level of accumulation or distribution by comparing volume to price movement. And OBV is categorized as a leading indicator. Third on the table, we have volume rate of change. So with this volume rate of change, it highlights increases in volume, which normally occur at most significant market tops, bottoms, and breakouts. So with this indicator, it highlights increase in volume, which normally occur at most significant market stops, bottoms, and breakouts. And this is categorized as a lagging indicator. Let's move to the next slide. So this will be the end of this slide. So tips on how to use technical indicators. You see, we've talked about a whole lot of indicators. There are a lot of them, and they are all categorized in leading and lagging. And we have types of them, and the types are what we discussed previously. We have 4 types of indicators. As let's go over again. The first one is trend indicators. The second one is momentum indicators. Third is volatility indicators, and the fourth is volume indicators. So I hope you all have taken note of indicators and you have known the uses and the meaning and the significance of using them. We will go to the practical side of it. Maybe from next week we'll go when we will do more practical of all the indicators, but it may not be for all the members. All the members in the free group, it will be basically for the elite members, but it will be for the elite members. But there's some person, as a certain person in here that joins every single meeting, and he joins on time. That's Inform. I don't know how to pronounce it. Inform. So even though he's not part of the elite yet, but he will get the access to join from tomorrow. Okay, so let's finish with this. So tips on how to use technical indicators. So covering with the first tip, covering more than 5 indicators is not good. Like when you have lots of indicators on your charts, no, it's not good. You need to study. Let's see, one or two. You can study all indicators and then pick one or two or three to use them to for your profitability to get it. You don't need all indicators. You just need 2 or 3 to be profitable with it to get it. You may need let's say moving averages and then let's say RSI or stochastic. So with moving averages and stochastic, you have 2 indicators on your screen. But let's say you have moving averages, um, 50 EMA and then 200 EMA together as one. It's not two. You get it. Even though you have 50 EMA and then 200 EMA on your screen, you don't have 2 indicators. You have one indicator. That is because you have moving average. You get it. You have moving average. So when you add another indicator, you get it, such as stochastic. Stochastic is different from MA. You get moving average. So when you add something like stochastic, something like MACD, something like Chaikin oscillator, so on and so forth, then you are combining one or more indicators. So you don't need to have all indicators. I see some people having RSI, stochastic, MACD, all on one screen. No. It doesn't make sense. Like it doesn't make. You don't need to. Do you get it? You need to, like some people do, and it works for them. I won't talk against that. No, because in this market there are billions ways of making it in this market. Just find what works for you and then use it. And the fact that something is working for somebody doesn't mean it will work for you. To get it, you have to find your way. You have to because this business is all about psychology. It's all about emotions. It's all about your mind. So the emotions which somebody is using to trade his or her strategy is not the same as you, because we are all individuals from different backgrounds. So let's say that the emotions I use to trade my strategy, when I give it to you, you can't have that emotions to trade with it. You can use my strategy, take something out of it, and then form your own strategy and use it. So that's how to create your own strategy. So with covering more than 5 indicators, no good. Like don't use more than 5 indicators, no good. So just focus on 1, 2, or 3 together. 1, 2, 3. Focus on them. Learn it very, very well, and then have the edge on them to get your profitability at the long run. So tip number 2, never choose indicators that generate the same signals. As we talked about, we have leading indicators, we have lagging indicators. So you don't need to choose 3 leading indicators at the same time. Like there's no need. How should you choose 3 leading indicators on? There's no need. You need, like you can choose one leading indicators, one leading indicator, one lagging, and then you compare. You get it. So you have the confluence on entering and exiting. And the tip number 3, confirm your strategy by using an additional indicator or indicators to substantiate or trend suggested by one indicator. So let's say we have, let me use 200 moving average as an example. So with this 200 moving average, when prices are closing above 200 moving average, it signals as the trend, a bullish trend. When prices closes above 200 moving average, it means the current trend is an uptrend or a bullish trend. Do you get it? And when prices are closing below the 200 moving average, it means the current market movement is in a bearish trend or downtrend. So you can add a 50 period moving average to the 200 to confirm. You get it? So when a 50 crosses the 200 above, then you get an entry to enter for a buy. So when you see the 50 crossing the 200 below, then it means there's a change in the market. Do you get it? So you have to be selling. So tip number 4, learn what indicators are. I always tell people that some people will say indicators, they are bullshit. You don't see, there's nothing bullshit in this market. You have to learn it to learn it very well and then use them in your benefit. So what is working for you? Most of the time I say this, those top traders, you don't have any magic swan or magic strategy, or they don't have any magic thing. No, it's simple. If I tell you one billionaire, a strategy of one billionaire hedge fund manager, you'll be surprised. His strategy is just simple. He's using 200 moving average and then 50 moving average on his screen. That is what he uses. And his confluence is when the 50 moving average crosses the 200 and price hits and give confirmation on the 50 moving average, he will buy. That's it. He will buy. He will buy until the 50 crosses below again. And he has been using this for, I won't even say decades, because this man has been trading since he was 16 years. Now he's somewhere like 50 years. Do you get it? This strategy is what he has been using, and now he's a hedge fund manager. When you talk about hedge fund, I know most of you know what hedge fund manager is. So you don't need certain things that okay, some of you are saying I should show you what MA is on the trading view. Okay, I'll do that before we go. So give me a second. Let me I'll show you that before we end this class. But let me give you the last step. The last step is to learn what indicators are and why you would choose one indicator instead of another. So this is the end of this slide, and we'll move to okay, we'll move to the screen at the moment. Give me a second. Let me go plug my laptop. Give me a second. I'll be right back. You all can hear me. I hope you all can hear me. So, hello. I hope you all can see the screen.
Yes, I can see.
All right. So let me do refresh this. I think the network is a little slow. So let's use Euro USD. That is the common pair, the most traded pair in the market. So Euro USD, the most common, the most traded pair in the market. So let me add indicator on the screen. Most of you, like some people will say, I don't know how to add indicator on my screen on blah blah blah. So over here is where to add indicator, where my cursor or my mouse is. You see there is something FX and there's indicators or strategies. So click on it. There will be a menu. So you have to search the type of indicator you are looking for. But today we are looking for MA, moving average. So we type in just MA. So over here, we have moving average, we have MA crosses across MACD strategy. So we go in for what we are looking for, MA. So first MA is on our screen. How will you see our first MA is on our screen? After we clicking on the MA, it will be automatically added to our screen. You can see it here, blue. On your left, see MA9 close. We need 2 MAs on our screen. So we go and click on the MA again. Click it once again. Now we can see 1, 2. You have MA9 close, MA9 close. Now we have the 2 we need. So we go to close this. And then you can see on our chart. Because the moving average we have here are both 9, that's why they are all the same. So we have to change the parameter from 9 to the first one should be 200. So what you have here is MA. We have input, we have style, we have visibility. So over here on the input side, indicator time frame, you leave it like this. You come to the length, we change the length from 9 to 200. 200. We leave the source as close and offset as 0. Then we click on OK. But before that, let's go and change the appearance of it. You can go to style to change the appearance. So over here, the style, you click on this. You can see over here, you can change to any color of your choice, but let's leave it to this particular color. We'll click on OK to save. As you can see, this is our 200 moving average. You can see it right here, 200 moving average. So let's go change the other one to 50 MA. So you click on this settings. Settings, you go to input, then length, change the length to 50. And then we change the style, the color to white. Then we click on OK. Good. So simple. As we can see, we have 200 and then 50 moving average crosses. So let's go to previous chart. Over here, we have 1 hour chart. We have 1 hour chart. Let me go check. Before that, let's look at the 1 hour chart and how the 50 and then the 200 moving average crosses helps. So before that, over here, we can see something right here. See, price crossed over here. The price over here crossed. Price crossed over here. As you can see, price crossed right over here. So as price crossed over here, Paul Tudor Jones will just wait for price to come back and hit this moving average, and then he will enter a buy. So if we are using just with this cross, price crossed over the 200, when prices are closing above 200, it is in an uptrend. Do you get it? When prices are closing above 200 moving average, uptrend. You wait for the 50 moving average to cross the 200 above. Then, so the 200, the 50 crossed over here. You just wait for it, for the retracement, and then you enter a buy. You put your stop loss below your moving average, and then room, here you go in profit. It came down here. You can buy again. You put your stop loss somewhere here. Maybe you be stopped out somewhere here. You buy again, because in this area you just buy. When 50 crosses 200, you just buy. You don't sell here. You buy. With his strategy, he will just buy. He won't sell. So he will just look for buy opportunities when 50 crosses the 200 above. And over, you can see you can have nice like from here to here, nice one. From here to here, nice one. So let's say 2 trades, then you are good to go from, let's say, from 25th of August to 27th of August. You've gotten nice 2 trades. Let me use the pip calculator to calculate something right here. So let's say you cut let's say you cut 36 pips right here, and then you cut another 36 pips right here. Let me say no, it's more than 36. Okay, 47 pips. So 36 plus 47, you've gotten like this. And with this master traders, they don't trade every day. Like, they don't trade every day. Sometimes twice in a month, sometimes 3 times in a month, not in a week or in a month, and they are making millions. They're making millions. With us, you have to trade every day because you need to accumulate more money. Because our account balance is small. they are having billions in their account. We don't have billions in our account, so we need to trade often to get more money in our accounts, but not that often. So let's go to previous charts to see. So over here we have cross down. We have a cross down, that is a death cross. This one is a gold, it's called golden cross, and then a death cross. So it crossed down here. Paul Tudor Jones will just wait for price to come hit this candle, and beautifully price came up to hit here to trigger his buy, and he will enter a trigger a sell, and he will enter a sell. So this side, price getting closer to this, he will sell again. Getting closer to this, he will sell again, but maybe he will be taken out sooner to get it. So when price starts move closing above the 50, he will wait. So there's a simple strategy that works perfectly for people. But the thing is, you need to know how it works. You have to study it very, very well to get to know how it works. To get it, you have to study it very, very well to get to know how it works. You can't just oh, why my screen sharing is paused? Screen sharing is paused. I don't know why my screen sharing is paused. Let me resume screen sharing. Hello. Oh, my screen wasn't sharing and none of you told me. I've been talking
It's
for a
sharing.
while. It's sharing now, but it wasn't sharing.
Was.
It was
was
sharing.
sharing. It was.
Okay,
Yeah.
okay, okay. All right,
It was sharing.
all right, all right. So with this, we have, you see the crosses. So you have to learn to master how they move. So it all depends on the time frame you use. Either 1 hour time frame, you have 4 hours time frame, and most of the time, what I've stated about MA crosses is when you use on the larger time frame from 4 hours to daily time frame, you get it's very smooth. You get it. So let's say with this cross, price crossed over here. When price closed below this, we just wait for price to come hit this 50. Price did it beautifully. We see this beautifully. We just enter a cell room from all this place to this. Let me just do something for you to see. See, the thing is, traders of today want quick money. That's why they don't see all these opportunities. Do you get it? If you take your time to study the market, you get, see, you have 265 pips. 265 pips. Let me calculate the days from 15th June all the way to 18th June. You have gotten 255 pips for just one entry. Just enter the trade, set your stop loss, take profit, and then sleep. Do nothing again. And over here, you can throw your stop. As price is going your direction, you just bring your stop loss below, somewhere here, and then when price hits here again, you enter a sell again. So let's say you are trailing your stop. So you enter a sell here again from this direction, a sell again from this point all the way to here. Let's see, just here. Just here, you've gotten 137 pips from this direction. You still have your previous trade running. Do you get it? So let's say with this final one here, you enter and the last trade over here, the last trade over here, and that is giving you 89 pips. So let's calculate. Let's do that. And this trade was still running, so we have to bring the calculator down to this side to get everything done. And this one was also calculating. Bring this one to this side as well. So you see, we entered 3 trades in from let's say 15th June all the way to 12th July. So 3 trades. No. Let me 7th July. So from 15th June to 7th July, just 3 trades. And I want you guys to do the math for me. The first trade, you got something somewhere 335 pips. 335 pips. Do the math for me. 335. all of you should open your calculators. 335 pips. 335. 335 plus this is 162 plus 162 plus 89 plus 89. That is 586 pips from 15th of June to all the way to 7th of July. So let's say in a month you've been able to get 586 pips. They are all wins. You didn't lose in this trade. You didn't lose in the month. You see that the beautiful thing of thinking in the long term, you didn't enter trades every day. You didn't trade every day. You just entered first, second, and then the third. Just sit down and look for opportunity to get it. So 586 pips in a month. So let's say you are trading one standard lot. So one standard lot is $10 per pip. So let's multiply the 586 by 10 times 10. That is giving you $5,860 in a month. And someone will say 500 is small. Hey, 500 is small. In your life, have you ever worked a month and you've gotten $5,000 before? Tell me if any of you here have worked a month and they've been paid $5,000 before. See, the reason why most traders fail is they don't think in the long run. See, you enter just 3 trades and you've made 5,000. You didn't sit behind your screens every day. You just entered 3 trades and you've made $5,000. No stop loss hits. That's beautiful. You get it, just 3 trades. It made $5,860. Let's say you are trading let's say 2 lots. Let's say let me put it 2 lots. You have enough equity in your account and you are trading 2 lots. So with 2 lots is $20 per pip. So times $20. That's going to give you 11,720. You get 11,720. But let's say you are trading 0.01 lots. That is $1 per pip. 0.01 lots, $1 per pip. $1 per pip. With that, you multiply 586 by 1. And that is giving you $586. At the end of the month, $586. Let's multiply it by CD. $1 is 6 cedis times 6. That is 3,560. How many of you are making 3,560 Ghana cedi at your work? How many of you? Like, how many of you are making 3,500 at your work? I'm asking a question. How many of you? So the thing is not all about how quick you make it, but how well you study it. You get it. You don't need to trade all the time. You just have to have an edge in the market. You see, these indicators, some people are saying indicators are not working, but what I showed you, indicators really work. Do you get it? Indicators really work. Do you get it? You get it? Indicators really work. So as we talked about, from Monday, we will continue with indicators. We will learn from all that we did today. Today I did a little illustration on 50 MA and then 200 MA crosses. That is why so I'm not going to go through all the indicators. You get it? I'm not going to go through all the indicators. These are the examples I gave you today. From tomorrow going, we are having intensive 6 months training. Intensive 6 month training. If you miss class, I don't care. I'm not giving anyone recording. If you miss class, I don't care. You go. I'm not waiting for no one. I'm ready. See, this time around, I grind with those who grind with me. I wait for no one. So if you miss class, that's none of my business. I'm not giving recording to those who miss class. I give recording to those who participated and did not understand certain things, I give it to you. So if you think you just miss class and come for a call and forget about it, you're not gonna get it. So from now going, I grind with those who grind with me. Saying again, I grind with those who grind with me. Even if you are a paid member and you don't pay much attention, I'm leaving you behind because I can't be begging you to come to class. No. So both the elites and the free members, and I'm telling you again, the free members, please take advantage. And this elite mentorship or elite team is giving. See, some of you don't need to pay everything, like all the amount of money to start with the elite team. You need to pay something small, like pay up something small. It's not the money that I want. I want something that you put in that will show that you are putting in effort or something like that to get it. So you can make payments small bit by bit. Let me say $200 a month. Any like 200 cedis a month. Like let's say $20 a month, $30 a month. Anyhow, you'll be flexible doing that payment. Just do it. Do you get it? Or if you can pay everything in bulk, you do it. Anything that will make you flexible to learn, just do it. Do you get it? Just do it because you can get this anywhere. You can get it anywhere. Please and please again, from next month to the next 6 months coming, it's intensive because from next year going, I should be seeing massive change in all of you because that is the goal. That's my goal for this next 6 months. I want to see massive changes. I want to see you guys just making it. You get it? If I'm not making it, that it's okay. It's okay. I don't even want to make it. I want you guys to be making it. You get it? If I'm not making it, it's okay. You get it? If nobody sees me making it, it's okay. I don't even want people to see me making it, but I want everybody in here to be making it, and I want that will be my happiness. You get it? That will be my happiness. So please and please again, from tomorrow forward, they're having intensive class. They're having intensive training. So you need to sacrifice. I'm doing a lot of sacrifice myself. See, since morning I haven't eaten. I haven't even taken time to cook something for myself. But I was doing research on how to teach, how to prepare certain things for you to teach. You get it? So I do sacrifice certain things. So some people will sit somewhere and say, "Oh, me today I don't have time." So you do it on the time that I'm free. No, I can't do things on the time that you are free. No. I go with people who are serious. I go with people who mean business. You get it? I go with people who mean business. You have busy people. I can choose not to teach nobody. I can choose like I don't even like teaching sometimes because it's boring. Like it feels like I'm forcing people to learn something that will be profitable to them. So please and please again, see, if you change your mindset, the future is bright. If you work on yourself, God is helping everybody, but you need to put in the effort. If you want a better future, you need to pay the price. Yes, you pay the price now and you enjoy the future tomorrow. So I think this is the end for today. And I'm begging the free members in here to please take part in the light team because there are a lot of things that will be going on in the elite membership. There will be massive things. It's not only about trading. There will be real estate. I'm telling you just this. There will be real estate and many more on this. So don't miss it. Don't miss it. Don't miss this train because we are not here to just trade. We are here to build wealth. You get it? We are not here to just trade and then be buying cars to live in a flash. No, we are here to build wealth for the generation. You get it? So all of you should just buckle your seatbelts for this roller coaster because there are a lot of things coming up. And this is scary. If you don't buckle up harder or strongly, you're gonna fall, you're gonna trip. So everyone should match you up and give it all. Give it all. So thank you all for coming, and I really appreciate your time for joining. If you have any question, you can ask. You can ask me here, or you can just put it in the chat, or when class is over, you can ask in the group. So anyhow you want it, just hit me up with a question. But from tomorrow going, you continue with the study of indicators, the practical type, the practical aspect of it. So I hope all of you took notes, because I'm not going to give the PDF out. I'm not going to give the PDF out. If none of you took notes, I will give the recording out to all those who participated. So please, after this class, kindly send me your email to my privately. Send me your email privately, and then I'll connect you to the video. So without wasting much time, let's indicator work on. Oh yeah, indicators works on crypto. It works on all markets. Indicators work on all markets. All markets. As far as markets, it works on stocks. Every market indicators work. Yeah. So any question from Inform, blah blah blah. We see any question at all. Any question at all? Any question?
Yeah, hello, sir.
Oh yeah. With you, I said I will show you something. So can you please remind me on what I had to teach you, so that we go over it very fast?
Okay. My question was, in case I've entered a trade without a stop loss and a take profit, and it runs, as we all know, when you enter a trade, it runs in negatives before it comes to the positive side. So in case now it is in the positive side, how do I set a take profit and a stop loss so that it wouldn't reverse back into negatives again?
Okay,
I don't know if I'm clear with
yes, I'm very clear with it. Give me a second, I'm coming. I'm plugging my charger.
Okay, sir.
Oh, hello. Okay.
Yes, sir.
So with your question, so let me do something on the screen for you to see. Let me see. If I can do something on the screen for all of you to see. That is right here. Go to EDC. Okay. Go to 10 minutes. Please give me a second. I'm coming. I want to do some setup for you. Okay. Okay. I hope you can see my screen now.
It is sharing, not yet.
Okay.
Okay, it is.
Yeah, we can see your screen.
All right, good. So as you can see, I've entered a buy on BTC USD. So I've entered a buy on BTC, and you can see it's running in $162 profit. You see it? Yeah, so $162 profit. So let's say I did not put any stop loss or TP right here. I did not put any stop loss, nor TP. So with what the question here asked, if you have entered a trade and then it is going in your direction, and you want to put a stop loss and then the TP in a position where even if the market reverses, it won't leave you in loss. it's a good idea. It's a very good thing. So this is how you will calculate it. Give me a second. Let me take off certain things. So let me use this line to indicate something here. So let's say price has been moving from this side to that side. So I'm in profit of, let's say 151 now. So market is trying to come down. So I don't want the situation whereby market will just come and clear all this profit that I've made. So I will put my stop loss at this level where I'm putting this black line. I hope you can see this black line. So the value of the black line is 48,669.19. So I have to go to my this and then do something about it to get it. So over here, I have to go put my stop loss and then my TP. You get it? So I have to put my stop loss and my TP. Let me go something right here. Okay, so I want something here. Okay, so protect positions. So on your MT4 or MT5, you just open your chart. Just open your chart. Go and search for this bar, this horizontal bar, and then go and put it above your entry or below it, where you think please show us how to connect our trading account to TradingView. Oh, please, trading with TradingView, not all brokers use TradingView. So it depends on the broker you choose before you can use TradingView. So let's say if you are using FBS, XNET, and a lot of traders, the only access or the only terminals you can use are MT4, MT5, and they are web traders. But with forex.com, you can have access to TradingView. Yeah, you can use TradingView to trade. You can use MT4 to trade, but you can't use MT5 to trade. So they all have their cons and the pros to get it. So it depends on the broker you are using. That's why. So with this, I am setting my stop loss here. Instead of setting stop loss here, I'm setting stop loss here. So when you open your MT4 or your MT5, just look for this horizontal line. Put it to where you think it's favorable for you, and then go and take the value, the price value of that line. So on this, the price value of this line is 48669.19. So let's go and protect this. So we are protecting it. We set our stop loss. Let me put the price here. The price is 48,669 point what? 0.1919.19. So we've set our stop loss to that level. So we just have to do what? Modify. So you see, our stop loss, instead of our stop loss being here, down here, this is a buy trade. Instead of our stop loss being here, our stop loss is above our entry. That is securing our profit. So even if this trade reverse to hit this, you won't be in loss, you'll be in profit. The trade won't close in loss, it will close in profit. So with this TradingView, but with sorry, with see, I'm trying to see if this will reverse and hit the stop loss for you to see, but let's say maybe it won't. So if you are using your MT4 MT5, after entering a trade and maybe you are going to sleep, you didn't put stop loss, you are going to bet, and the trade is already in profit. What you have to do is open your chart, find where you, let's say you entered a buy trade. If you enter a buy trade, normally after entering a buy trade, your stop loss is below your entry and then TP is above your entry. That's correct. So if you enter the buy trade and then it's in profits, a lot of profits, and you want to go to bed, you don't want to wake up to see loss. So you just on your MT4 or MT5, just locate the horizontal bar and then put it to a favorable place or a favorable position where you think, well, okay, this profit is enough for me, even if the price, and don't put it very close to where the price is, because if you put it very close to where the price is, it may hit the stop loss and give you that little profit and then continue to your direction. So you put it to a favorable place or in the middle from the price, the current price to your entry. So you put it in the middle, as I've done it here. So I'm sure this will surely hit my stop loss. So if you put it right there, and then the price, you go to bed and the price reverses and hits your stop loss, you won't be in loss, you'll be in profit because your stop loss is at break even or you have locked some profit above. Let's say you entered a sell trade. You entered a sell trade and then price is moving in your direction. So sell trade price moves downward. And normally when you enter a sell trade, your stop loss is above your entry, your take profit is below your entry. So you enter the sell trade and you are in profit. Everything is going well for you. You want to sleep or you want to get off your screen. So you bring your SL, your stop loss, from where it was to break even. You get it? If you are in the
Mr. Please, I can't hear you properly. It seems your voice is shaking.
Hello, can you hear me now? Hello, can you hear me now? Can everybody hear me? Hello, can everybody hear me?
Yeah, we can hear you.
Okay.
Yeah, we can hear you.
All right. So let me use an example of entering a sell trade. So when you enter a sell trade, it means market should be going down. Price. Let me use something to illustrate. Use USD to illustrate something right here. Okay. So Euro USD, using Euro USD to illustrate something. So let's say you are entering a sell trade right here, and my chart is messy, I know. So so your basically your stop loss is above. When you enter a sell trade, your stop loss is above your entry, and then TP is below your entry. So as you can see, your TP is here and your SL is here. And let's say price has moved in your direction up to this level. Let me use something to indicate that. Let me use this to indicate that price has moved all in your direction to this side. Let me change the color to white. Okay. Price has moved from this red line to this white line, but it hasn't reached your TP yet, and you want to get off screen. So what you have to do to lock your profit, let's say you don't have SL stop loss at all, you didn't have a stop loss at all, but you don't want the situation whereby price, you get off the screen and then price will just reverse where it is and then go against you. So you just bring you just set a stop loss, put a stop loss right here, somewhere favorable. You get it, somewhere favorable. See, this is your stop loss. Let me change the color of where the stop loss is. Let me put it green. Okay. So this is where you put your stop loss. So the green line, you take the value. See, on the green line, you see 1.17884. You get 1.17884 for this. So you put this as your stop loss. You get it? Instead of being here, the stop loss is here, locking your profit for you. And then you bring your TP. Your TP is 1.17677 here. Do you get it? So both your TP and your SL is below your entry. So even if price reverses and hit your stop loss, let's say you hit your stop loss, you will be in profit from this direction to this. So let me calculate. Let me calculate something here. So let's say okay. So let's say price reverses. Price went all the way to, let's say, 15 pips, 16 pips, and then it reverses to hit your stop loss, and your stop loss is 7 pips. So you've gotten 7 pips instead of getting a big loss. You've gotten something small. Do you get it? So that is how it works. I hope, Eric, you get it now. Eric, please, do you get it now? Hello, Eric. Is everything clear now? Hello, Eric. Is everything clear now? Where is Eric? Pim Kumu Adeshe Hineba or whatever. Please, is everything clear? Where is he? Okay, without wasting my time, he's not here, so I'll just move on. Any other question?
No question for now.
All right. So, I'm from. We will have a class from tomorrow. Let me say tomorrow is Monday, Tuesday, Wednesday, Thursday, Friday. So I'm giving timetable out. So everybody should take notes. Write it somewhere. Our timetable, we're having class on Monday. So Monday classes are from 7 p.m. to 8. It's just 1 hour class. 7 p.m. to 8. Monday class from 7 to 8. Tomorrow, 7 to 8. You don't have class on Tuesday. You have class on Wednesday. Wednesday is 6 p.m. That will be 7 p.m. Nigeria. 6 p.m. to 7:30. That's 1 hour 30 minutes. 6 p.m. to 7:30. On Thursday, the same 6 p.m. to 7:30. On Friday, it's 5 p.m. I don't care if you're at work. No, that's none of my business. Friday is because on Fridays I sleep early. So Friday is 5 p.m. to 6:30 or 7. And on Sundays, as usual, 5 p.m. So this is our timetable for now. It may change. As I see more seriousness in all of you. I know most of you are serious, but it may change as the number increases. And if I see seriousness and then
Boss,
time is not
time, no.
uh-huh. Okay, time no, yeah. Mondays is 7 to 8, 7 p.m. evening to 8, 7 p.m. to 8. Tuesdays you don't have class. Wednesday is 6 to 7:30, 6 p.m. to 7:30. Thursday 6 p.m. to 7:30. Friday is 5, from 5 to close, like 5 to we get tired. That's for Friday. So Friday, let's say from 5 to 6 or 6:30 or 7. And then from on Sunday it's 5 to 7. So let's say it's let me say it's 6:20, also 5 to 6:30 or 5 to 7. So how well we can use the time, because this 6 months, after this 6 months training, like all of you should be somewhere, because I want everybody to be somewhere to get it. I want everybody to be somewhere. So I hope that's it for today. Any other question? Market will be open in few hours from now. So all of you should go get prepared for next week. And I know God will bless us in let me tell you something. Let me tell you one thing. I know not all of you are Christians. I'm not this Christian, Muslim. No. I just believe in God. I'm a Christian. I believe in God. I believe in Jesus. I believe in the Holy Spirit. That's me. Together. I don't enforce anybody to be in my religion. All I want you to know that there's something, someone beyond or someone supreme about us all. And when we ask him or when we pray to him, he answers prayers. So please and please again, in every situation that we go through, everything that we get out of the market, it is not a bad deal. It is a blessing. Being it a win or lose, being it a profit or a loss, it is a blessing. We have to take it in a positive way. If we lose in the market, it's a lesson for us. We learn from it. Do you get it? We learn from it, and then we move to the next stage. All of you, I want to tell you something about this. The reason why I'm able to teach you guys is because I've been through a lot. I've been through losses. I've been through struggles. That is why I'm able to identify. I'm able to correct you. I'm able to direct you. It's because I've been through. The market has taught me, and I availed myself to be taught by the market. Do you get it? So if you also wants to be somebody teaching somebody somewhere in some time to come, you have to allow the market to teach you. Do you get it? You have to allow yourself for the market to teach you. So please and please again, any outcome we get from the market is for our own good. We have to take it in a good faith and learn our lesson from it, and then enter the market with good expectations next time. So God bless us all, and may he make us great and strong. I love you all, and I want success for all of you. Thank you.
Love you too, boss.
All right. So we call it a
Bye,
day.
Nina.
We call it a day. You continue in the chat. So goodbye to you all.